All right. Good morning, trade pros. Welcome to the morning market update for Monday, April 1st of 2019. This is George Papsoff, Trade Pro Academy. I hope you guys had a great weekend. Um, I have a huge announcement to make with you guys today before we start the broadcast. Over the last couple months, I've been involved in doing some thinking, strategic planning, and a huge moment's come up in my career and the business of Trade Pro Academy. And after 7 years of successful education and thousands of traders and churning out some wildly successful, profitable day traders and swing traders, we've made the decision to sell the business to a proprietary trading firm. And what they've decided to do is acquire the education, white label it, but shut down the front end of the product. So I'm really excited for this, the transition. And April Fools, come on, guys. If you fell for it, you don't know me well enough. But you will get to. I was gonna keep it going, but there's no point. I don't want to give anyone a coronary. That's not happening. We are in the works of doing some stuff to collaborate, but we ain't going anywhere. We're here to stay for the long haul. Comment below if your heart started to. Mine just started to beat really quick, just making that joke. But yeah, April Fool's joke. I'm all of that. Negate it. Just having a little fun with you. I love to mess around, April Fools. Take nothing I say today literally. All right, morning market fun fact. On this day in 19, except the morning market update and serious stuff. On this day in 1930, total market value of New York Stock Exchange listed companies hit $67.5 billion, up roughly 40% from their trough in the Great Crash of 1929. All right, and then the New York Fed cut interest rates again to just 3.5%. That was down from 6% in 1929. So after cutting rates in half, all right, investors turned super bullish and many leading stocks doubled from their 1929 lows. And by year end, stocks were down more than 40% from that level. All right, so here's an important, this is very interesting because it sounds almost like we're in that exact same situation today. Federal Reserve cut rates and the market's driving higher. I'm here to tell you this, it could continue to go higher. We're in an environment where there's low rates, dovish Fed, and there's optimism around the stock market. However, the economy is slowly deteriorating based on the latest numbers. This week, we're going to get a peek at some of the latest numbers. On Friday, we have the jobs report. We'll talk about that towards the end of the broadcast. All right. Today, something interesting happened. One of our members, Stephen H., commented in our room this morning, and I thought I'd bring this up to you. The UK clocks have caught up, and the European close is now 11:30 a.m. Eastern time. The daylight savings time for EST kicked in a couple weeks ago, so we had an extended volatility session for Eastern zone traders. We closed at 12:30, so we had an extra hour. As of today, that's no longer the case. We're back to an overlap of just 9:30 to 11:30, or a 2-hour overlap between U.S. Open and European stock market close. So that's something to keep in mind as well. Why are markets rallying so much? Last night on the Globex Open at 6 p.m., the S&P 500 had a higher print than its close. We gapped up around 5 points, and the reason behind that is a strong China PMI number. So China's manufacturing has been slumping, and the latest economic news from China were really negative. A lot of Asian market economic indicators came out to the downside, and that kind of fueled to the concern globally. However, on Saturday, in the world's second largest economy, market manufacturing PMI came in at 50.8 for March, which is above the all-important 50 mark. In terms of manufacturing, anything above 50 is expansion, anything below 50 is contraction. All right, the official PMI rose to 50.5, and we're back into growth territory, and markets had a little rally to incorporate and price that in. That's the Asian session, and overnight on the U.S. Open, it's a whole different ball game. All right, there's actually 3 market segments within the trading day. The first one is the 9:30 a.m. U.S. Open, all right, to 11:30. That's the U.S. European overlap. The second session starts around 12:30. Even though the market's open, most people are on lunch. 12:30 to the U.S. closing bell, and then the third session is a U.S. closing bell all the way back up to the front of the next day's 9:29 a.m. right before the U.S. Open. All right, so if you split the session into 3, you're going to see a lot of beneficial analysis start to look better. All right, that's what we have on the equity markets. Yesterday, or on the weekend rather, Facebook CEO Mark Zuckerberg has stated that Facebook has too much power over speech. An interesting comment from the CEO of the company. We know Facebook's been battered for privacy concerns over the last 9 to 10 months. He said that he's calling for new global regulations to govern the internet. He's recommending overarching rules of hateful and violent content, election integrity, privacy, and data portability. All right. And he's calling on governments to introduce some kind of regulation, preferably global. And he said the following, this is a quote from Zuckerberg: "It's impossible to remove all harmful content from the internet, but when people use dozens of different sharing services, all with their own policies and processes, we need a more standardized approach." All right. Somebody who does this well is Europe. Their data rules and privacy legislation is really strong, and it's enforced very heavily. All right. If you send an email to somebody who hasn't opted in for it, there's a penalty of applied against the company that's a percentage of the revenue. So it's pretty strict. All right. He said to remedy its power of speech, Facebook's creating an independent body so users can appeal its decisions, and currently working with governments to make sure its systems to review content are effective. So basically, Mark Zuckerberg's opening the door towards some deeper privacy negotiations and discussions worldwide. And I mean, it's twofold. I'm sure somewhere deep down, he truly believes what he's saying. He probably does want to see some more privacy being implemented, some more control and more regulation around a regulatory framework around what's going on with these social media companies. And at the same time, I'm sure he's also doing it to appeal to shareholders, as Facebook is finally getting a little bit of a bid. He wants to push over some of those policy or the privacy issues of the past and say, all right, guys, we're moving forward in a new way. We're not going to let this happen again, rest assured. That's sort of the intent behind the message, how I'm picking it up. All right, in today's markets in Asia, Japan's up 1.4%, Hong Kong's up 1.8%, China's up a huge 2.6%, India's up 0.4%. And in Europe at midday, London's up 0.6%, Paris up 0.6 as well, Frankfurt's up over 1%. In the United States, S&P and the Dow up 0.7% together. Nasdaq's up 1% and rallying the strongest of all markets. So there you go. Nasdaq is looking like a leader this morning. We'll keep an eye out on those tech stocks. The probability for the day, the Dow Jones has a 71.4 expected positive rate, which means it's expected to gain based on statistics and historical analysis. S&P's got 71.4%, Nasdaq's got 61.9%, which makes today a pretty bullish kind of day from a historical approach. And we also have the China PMI numbers, and the market's going to like that. We don't really have any major news on the docket today. We do have one at 10 a.m. We'll talk about that in a moment. So I'm seeing an opportunity for this market rally to extend. And in fact, even though the economy is deteriorating, I could see the S&P 500 pushing to fresh all-time highs in 2019. All right, there's a lot of liquidity above that 2950 level in S&P 500, and we might just go up and tag the 3000. And that doesn't mean it's the start of a brand new bull market that's going to last for 30 years. It just means this: if markets are going to drop significantly, markets don't crash from lows; they crash from highs. So it's not unheard of to go out, wipe out the top, put in a new top, get some retail traders long for the breakout, get some short traders excited, rinse their buy stops out, and then drop. All right, so I mean, I'm seeing some bullish expectations here. The only thing you need to watch for is the middle of April. So we're clear to the upside till about April 14th, where a lot of S&P 500 companies go in blackout mode for earnings, which means they can't buy back their own shares. Company buybacks have been a great source of buyers for this entire rally. In fact, the people leading this rally is companies buying their own shares and retail traders getting jammed up late into the rally, and institutional money hasn't been involved as much. They're long, but they're not adding to their positions. So all in all, this creates an interesting environment. All right, you have a deteriorating economy. You have a push higher in equity markets on a dovish Fed. You have retail traders chasing the trend, and you have short sellers getting squeezed out. All right, but you're not getting that institutional buyer to come in with the big money. So that's a trend we're watching on. So mildly bullish for the week. Crude oil is up 0.1% or 1% rather today. It's broken through the Friday close. I was trading crude right into the close. About 210 was my last trade, looking for a flush of the upside liquidity, and finally got it right after 2 p.m. All right, gold price is down 0.3%. Bitcoin back above 4,000, up 0.6%. 10-year Treasury yield is up 3 basis points. which is good. 2.44%. As yields increase, markets will increase as well. There's a massive divergence going on in the market right now that every institutional trader and everyone at the trading desk is talking about. The 10-year yield is very weak compared to where the S&P is. S&P's gone on a run. 10-year yield has dropped off the cliff. And so that divergence, the jaws as they call it, eventually close by either S&P 500 selling off or the 10-year yield picking up. Right now, it looks like the 10-year yield is rallying, and both of them could happen. The S&P could sell off a little bit while the 10-year yield catches up. That's a trend we're watching, but it's not an action trigger. It's not a trade trigger. It's just a thing of interest. Keep an eye on it, all right, because that's super important in the market in today's session and this week as well. We have on the economic calendar today, 8:30, we have retail sales that came out this morning. 10 a.m., we have business inventories and the important ISM manufacturing index that comes out today, this morning. And those numbers are really important. Tuesday, tomorrow, we don't have much. We have core durable goods orders at 8:30 in the morning. That's kind of an important indicator. Won't be a market mover unless there's a huge deviations from expectations, which is 0.3% at this point. Wednesday, Thursday, no key economic events, and Friday is a massive day. Friday at 8:30, we have the latest round of non-farm payrolls or the jobs report for the month of March. We missed huge in February, so it's going to be very interesting to see how March numbers come out. All right, it's almost going to be a bad news is good news scenario. I think if we have a miss in non-farm payrolls, it continues to strengthen the fact the economy is deteriorating. However, it will add fuel to the upside because the Federal Reserve made the right move. If there's a weak jobs number, it's bad technically for the market overall. However, for the short term, it says the Federal Reserve will probably be more dovish. All right, and we'll say, hey, look, we're right to have paused interest rates. We're right to even decrease our expectations for higher interest rates. We're right to pause our balance sheet normalization, and we could continue on that path to be more dovish, which could send equity markets higher. So I'll cover that in depth on the Friday morning market update. But that's what we have so far. Slow week in the middle. Expect to see a little bit of upside early in the week, midweek reversal, and then it's all about the Friday jobs report number. Non-farm payrolls coming out. Also out of Canada, we have the employment numbers there as well. All right, so we're shaping up to have a great week. U.S. and China trade negotiations are ongoing. Last week, it was in Beijing. This week, it's moving over into the United States in Washington. Steve Mnuchin and Robert Lighthizer are leading those negotiations, and there's been progress made, which is also adding to the upside of the equity markets. Right now, the equity market is on a strong and fierce rally off the Christmas Eve lows. However, I'll tell you this, markets are looking for good reasons to price in and shrugging off the bad reasons. And that's typically what a bull market does. And at some point, when there's enough chinks in the armor, things are going to start to look to the downside. But for the moment, everything's all signals green. It's bullish. Early on, we're going to look for a pullback to key support structure for a long opportunity. And if we can't clear out some of the liquidity to the upside, then we're going to start to plan the short. So it's important to have an idea when you start today, but it's also important to be around a group of traders that do this professionally. Join us in a trading room. We trade live every single day with our team, and we do a good job at it. So I appreciate you guys. Hope you've had a great day, and hope you enjoy my April Fool's joke. I'm going to turn around, read a comment or two on YouTube. Then I'm going to start the morning market update with our members, and we're going to look at some key levels, do some analysis, and plan our first trades. Usually in the trading room, we cover S&P 500, NASDAQ, Dow, crude oil, and we trade whatever the opportunity is. All right, let's turn around and get started. Thank you for tuning in. Let me see if there's any quick comments on YouTube, because I realize I turned my back to you, but I do want to answer your comments. They're important to me. And I just want to see one thing. No, I won't be able to see them till later. Sorry, guys. I have to open the broadcast myself to see the comments, and that's a lot of work for me at the moment. I want to get started with the morning market updates. I appreciate you. Have a great day. Take care. Join us in trading room. There's more opportunity there. Also, the elite team trades in the room Friday at 8:15 for non-farm payrolls. So put that on your calendar as well. We're going to trade that report together live. All right, team. Take care. Have a great day. Trade pros in the room. Let me set up some levels for you in the S&P 500, and let's get started.